Good morning, this is Claudia, and welcome back to my YouTube channel. Anyway, today I want to talk about indices or an index. I'm pretty sure you've heard the term. If you ever watched a finance channel or the finance media, you know that they're talking about the indice and how the indice did. So an index is a collection of stocks. The ones that are the most famous are the Dow Jones Industrial Average, the S&P 500, and the Nasdaq. To measure these collections of stock or these indices collectively is much better to get an idea about the market and how the market is doing than if we're just measuring a single stock. So very important. The very first index was the Dow Jones Industrial Average. Financial reporter Charles Dow, he in 1896 he started adding 12 stocks together and then dividing them by 12, and that gave him the average performance of these 12 stocks, and that's how it was created. So today the Dow consists of 30 largest companies, and they're being weighted by price. So in 2018, Boeing was the highest priced company in that index, which any kind of missed performance or increased performance would have really changed that index dramatically towards the upside or the downside. So in it's pretty performs pretty close. I'm sorry. It performs very close to the S&P 500. The S&P 500 has 500 of the largest stocks, the largest companies, and it is weighted by market cap. So the S&P 500 is weighted by market cap, which is your outstanding shares multiplied by the price per share. So a little bit different. Yeah, they move very closely, but because the S&P consists of 500 largest companies, they feel like it's a more accurate measurement of the market. And then of course the Nasdaq, and those are just the three we're talking about today. There's about 500 indices on the U.S. market, and but these are just the most important that everybody talks about because they track certain stocks. The Nasdaq consists of 3,000 companies, and it has many of the smaller cap companies included, but also very high cap companies like Apple, Amazon, Google, or Alphabet, and Microsoft. So very important. But because about half of it, maybe not completely, but about half of it consists of tech companies. So it's a really great measurement to track tech. So indices track the market, and the performance of any indices or of any index can vary from day to day or even year to year. But if you look at history, you can see that the market always raises. To invest in an index, you can't directly invest into an index, so you can't directly invest into the S&P 500. So you have to invest into a fund. So a fund would be an index fund that tracks the S&P 500, or a mutual fund that consists of several of those stocks, or an ETF. So you can invest in any of those. One of them that tracks the S&P 500 would be VOO, a Vanguard fund. Vanguard funds are excellent because they are low priced. They don't have a lot of fees. VTI would track the whole stock market, everything. And then of course there's so many others out there that you can research. But yeah, so you can't invest into an index directly. You have to invest into a fund, which is fine. So anyway, I hope this helped a little bit for you figuring out what an index is. and I hope I will see you in my next video. And thank you so much for checking in. So goodbye.